Hey, what's going on, guys? It's Ricky with TechBot Solutions. Hope that you guys are all having an amazing Sunday. Today it is November 23rd, 7:54 p.m., and welcome to our Sunday Stock Talk. For those that have never tuned on in, every single Sunday I go live and I break down the top 5 stocks that our viewers see value in. If you ever want to tune on in live, all you literally have to do is subscribe to the channel and turn on your post notifications so YouTube notifies you when it is that I go live. I don't want to take too much of your guys' time, especially for those out in the East Coast. I know it's pretty late out there, so I do apologize for the little later live stream. I have family in town, so my dinner went a little bit longer today. So just want to go ahead and jump right in. Let's prep for the week. It looks like markets are opening up green. Will they hold? That's the big question. As many of you guys have seen based off of recent, time frames, we've seen significant pullbacks on not just NASDAQ, but everything pretty much. With that being said, it looks like we did begin to show signs of a support on Friday. The big question is it just a false reversal just to get rejected at a lower high and then retest and possibly make new lows? The uncertainty of the Federal Reserve not cutting rates yet, right, and possibly not cutting rates in the December meeting is still present. The concern of the labor market being very weak, still a big concern. And the concern of inflation is obviously still definitely a thing to take into consideration. With that being said, markets are incredibly bullish, as they often tend to be. So this weekend, we made numerous videos kind of talking about prepping for a market recovery. Not necessarily because markets have to recover, but I think that it's a good plan of action to prepare rather than to be surprised. So if markets do begin to recover, you at least have that 1 or 2 different stocks that you plan to invest in or trade once markets begin to actually recover. Not saying that they have to. Like I'm saying, we are still very uncertain based off of the current NASDAQ market. It could still form lower highs, lower lows. We could still see a continuous descending pattern. So please make sure you take that into consideration. With that being said, let's go ahead and jump right into it. So thank you for all those that are tuning on in live. I'm going to be breaking down 5 stocks. And if you want me to break down your stock, all I ask you to do is to share the ticker in the live chat and I'll break it down for you. So, all right, let me look at this upcoming week. See if anything stands out. Looks like we finally supposedly have the PPI report coming out, pending home sales report. We have CPI, right? No, wait. Yeah, it should be. Wait, that's PCE report, which is the Fed's favorite measure of inflation. Wait, what the heck? Yeah, no CPI. Wait, is that true? Yeah, no, canceled, right? All right, let's go ahead and jump right into it. All right, NBIS. I'm not a fan of this stock. Regardless of me not being a fan, doesn't really matter what I think big picture, right? We all see value in different ways. And I could see that if markets do begin to recover, one of the best performing stocks of the year, surprisingly, was NBIS. So if the hype resumes back into the market, not saying that it will, but if it does, then it can most likely give companies like NBIS the environment for them to recover as well. I want to remind you, it's been selling off since highs of 141. This is a very volatile stock. It's not safe to short and it's not safe to go long. So please do not hear what I'm not saying. It's down 43 to 44% from the highs that it made. So incredibly volatile and incredibly risky. Once again, not designed for beginners. But if you're a little bit more experienced and you think that it meets your criteria, the risk to rewards are favorable, then great, all power to you. I can see why you're paying attention to it. Or if markets do begin to recover from $87 per share to previous highs of 140, if it does go back to that, offers about a 59 to about 60% return if markets fully recover. That's a big if. If markets continue to get rejected, I want to remind you, it's always the most speculative companies like NBIS that see the largest retracement. jumping on into Investing Pro, we can quickly pull up NBIS, and you can see that, again, it is a company that does have at least some form of income, 218 million, which is not very much for the valuation that this company currently has at a market cap of $20 billion. So it is trading at a very nice premium of 183 times its earnings. Like I said, it's a big speculative stock, but I see why it's attractive for those that have a taste or desire for high risk, high reward type of plays. Let me make this very clear. This is not designed for beginners, not to go long and not to go short. Just want to make sure that that was very clear and well understood. Let's go ahead and move on to the next one. Coreweave. Okay, so I can't pronounce your username, but CRWV, right? That's Coreweave. I am also not a fan of this stock. I think it's been incredibly hyped up. I remember when it ran from $33 up to highs of 87 and from 187 all the way down to lows of 68. So like I'm saying again, just like NBIS, doesn't make sense to buy this if you're just the beginner. If you're a gambler and you like that high risk, high reward, yeah, and you believe that markets are bound to recover, I can see why you're paying attention to this because of how attractive it might look that, oh, wow, look, this thing can return, 154%. Yeah, in a perfect world, it can. But guess what? We do not live in a perfect world. And if it was that certain, I'm sure a lot of people, would jump into it. Nonetheless, it is a very hyped up stock. When it does find a support, as you can see, it did a double bottom test here from overall highs of 150, did a double bottom test, recovered as markets began to recover. So again, please keep that in mind. Went back to retest, got rejected, formed another leg down. So I see why you're paying attention to it. For me, I would not trade this, but if I were, I would definitely wait for confirmation of a reversal. Just like last time, you don't just buy because it's cheap, because the cheap can always get cheaper as it's consistently selling off and forming lower highs and lower lows. I would actually create alerts based off of, hey, is this thing actually showing signs of a recovery? Or is it just a fake out for another leg down? That's the last thing that you want to do, right? Thinking that you have confirmation of a reversal, getting ready to sell at highs, and then it just gets rejected and it dumps on you. Again, a very high risk trade. I just want to make sure that you're aware of that. But I can see why it's attractive, even if it does just return to $150 per share. And let's say you wait for confirmation of 85 without being a perfect trader from 85 to 134. Yeah, 58% return. That's an insane ROI. I can see why it's attractive. But again, it's incredibly risky. And it's always the most speculative stocks that see the hardest retracement. So please be very careful with this. Let's go ahead and move on to the next one. Yeah. Ricky, what are your thoughts on Open issuing warrants to shareholders, and how would this impact the price action in the short term? I'm not a fan of Open. There's like this cult, but Open's very relevant and very trendy right now. So I don't think it's a very safe stock to short. I have taken a few shorts on this stock itself, especially if you're part of my LPP team. You've seen it firsthand. With that being said, there's a lot more stocks out there that are actively selling off that just make easier shorts, right? Open is a little bit more trendy right now. I don't know why, but there's like a cult-like following for Open shareholders. I don't know why. I don't understand how they can justify a company that loses $300 million every single year. It's not a new company. It's not like, it's like PLTR when it was first getting started. It's old. It's like a Temu version of Zillow, but it pumped from 50 cents per share up to highs of nearly $11 per share. Again, just my opinion. That being said, they have their previous CEO now back as their CEO. And again, there's a cult-like following that follow the stock and think that it's going to be the new latest and greatest. To me, it's just a glorified pump and dump, but you have to wait for momentum to begin to fade. So once volume begins to fade, and if markets do begin to retrace harder, I believe Open can return back closer to $2 to $1 per share as the hype begins to fade. If you do not believe me, I encourage you to look more into it. I don't care about what the company is saying that they are going to do. They're trying to integrate AI and call themselves a real estate AI company. They do nothing. They are not an AI company. They are a failing business that can't even keep up with Zillow. They lose $317 million a year. They have a negative 16.5 PE ratio, and it's only getting worse. If you open the open research on Investing Pro, you can see that again, it is not a growing business. It is a failing business, not just an opinion, it's a fact. So looking at those facts, I am not a big believer in Open. Do I think that Open can pump up? Of course. A bunch of bullshit stocks pump up all the time. That shouldn't ever be the question, right? With companies being incredibly speculative, and if markets do begin to recover, again, if the environment is supported if markets do begin to recover, it supports these irrational valuations. Do you mind if you get out, please? Thank you. Yeah. Yeah, go. Sorry about that, guys. But again, to each their own. There's a lot of people that believe that this stock is going to be the newest, latest, and the greatest. And that's the beautiful thing about this being a free market, is that you get to invest your money where you see to be fit. I don't see anything attractive about Open. I view it to be a gimmick stock. It was a failing business that was heavily shorted for a reason, and enough, in my opinion, idiots came together to pump up the stock price. And they're holding together, which makes it a little bit harder to short because so many of them are holding. But again, just like anything, they'll eventually end up selling off, in my opinion. I don't see a bright future for Open. If you think otherwise, then I say put your money where your mouth is and feel free to buy it if you think that it's cheap. I think that we'll go back to close to 50 cents or $1 per share. I just think it's going to continue to correct. I'm a realtor and I have sold Opendoor houses for my clients, and every time Opendoor has sold it to me for a loss. So it's just, you know, if you've ever paid attention, like if you're like on Twitter or any social platform that allows investors to talk among themselves, you should listen to like the conversations that they are sharing with one another. All these speculative expectations of this company. But again, it's just like when you get enough idiots together, they don't care about the fundamentals, right? They're just, I like the stock, and they'll pump it up and they'll hold it, and they'll blame everyone else for their failure or their lack of success. But at the end of the day, they just picked a shitty stock. That's how I see it. You let me know what you think. And again, that's just my opinion. If you think that this thing is going to be the future and it's going to go to, $82 per share, be my guest. Feel free to buy it. It doesn't offend me, right? That's the whole point of these free markets. UNH, Logan, so you don't have to keep spamming. UNH, in my opinion, doesn't really make sense to trade it. Normally, during normal market conditions, it doesn't normally move very much where it's a stock worth trading. So if I were to pick top 5 stocks to trade this week, this just would not be one of those stocks. This is a stock that I'm invested in, and I'm invested in long-term for my daughter and for my son. It's not a company that I would expect to recover right away or anytime soon. My intention to make money off of this one is not anytime soon, which again is the whole reason that things can get worse before they get better for this company. It's being investigated. They're trying to make an example of it. But in my opinion, if you look at the actual fundamentals, I've said this over and over again, so I don't want to beat around the same bush, but it's a company that produces $435 billion in revenue and has $18 billion in net income. It trades at a very low PE ratio, 16.5 times its earnings. But again, it's currently being investigated and it can hinder its business. So I'm excited to, take the risk and be, invest in it when it's down. At one point, it was trading at $600 per share, which would yield about a 100% return if it does recover. But like I said, my position size is very small, and I have no intention of this thing recovering anytime soon because it's still being investigated. And because of that, I don't think that it would make a good trade. And I had a very interesting day on Friday, but that was a catalyst-based event that, again, overall markets aggressively recovered. So I wouldn't say that this is a huge win, because one moment's markets are quickly recovering and then another moment they're quickly correcting. Markets are very volatile this week. So if you're not, if you think that UNH is a stock worth trading intraday, cool, right? Like if you can play with the range, I just think margins are a little tight on the low end and even on the high end. Even with this incredible move, if you caught it perfectly from lows to high, that's a good move, 4.4%, but that's not a normal move, and it's very unlikely that you would catch the entire thing. So I like that. Oracle, I appreciate you asking for me to break that one down. Here we go. I did see that Oracle, there's an issue going on with Oracle, right? There's a reason that it's retracing so much. Yeah, after this insane push because of the ChatGPT partnership, it pumped up to highs of $345. I'm very happy to see that it's correcting because, again, it's irrational valuations that were being supported. Now that it corrected itself, yeah, it's a little bit more on the oversold side. There's something that I want to look into when it comes down to Oracle as a long-term play. There's an article that I was reading that shared some info that was of concern about Oracle. Now, again, that's long-term. If my intention was to day trade something like this, yeah, it's oversold, but it's incredibly bearish. Direction is against you. So if you want to try to get lucky to buy the lows and hope that it rips up to the EMA, there's some margin there. But again, understand that the direction is against you. It just makes it more challenging normally as direction is against you. But yeah, it does do a very good job selling off and then trying to recover. So I could see why you're paying attention to it. Just in case it does recover, you can get your little piece of Oracle. Totally makes sense to me. I just want to remind you again, you guys know that I'm a big advocate for taking risk management into consideration. While the entire market was encouraging you to buy and leverage yourself at all-time highs, I feel like I did a good job, but for some people, I know that I was incredibly frustrating and annoying because I continued to remind people that markets are overbought, they're overvalued, it's irrational markets, and do not be surprised if they correct. Obviously, I'm very early when it comes down to that, but now when you have 10, 15 to 40% retracements on a lot of big names, I'm not even talking about just, overhyped up stocks like Oklo or TEM or NBIS. I'm talking about big names that retraced like Oracle, 40%, 35%, 30%. I think it sheds light on why we focus so much on overvaluations and to just remind beginners, don't be afraid to be invested, but don't be invested with leverage, because as market direction turns against you, as it can, as we've seen, leverage is a terrible thing when it's going against you. You're borrowing money to lose more money. And I just don't think beginners should be exposed to that. So that is why, again, I like to remind beginners of that. So I focus a lot on working with beginners. I trade live with them every single day. My LPP team gets to watch me trade live every morning for 1 hour at market open. If this is ever something that you want to experience, I'm going to be live tomorrow right at market open, and it's the second link in the description down below. We have a little discount link in there for you. It's not free. If you want to learn for free, feel free to watch a few of my videos, and there's a bunch of other YouTubers you can also learn from. But if you're a beginner and you learn best with structure and you want to watch me trade live, that is exactly what LPP is designed for. It's a one-time payment for lifetime access. We have members that signed up in 2018 that still watch me trade live every single day today. So again, if that's something that you would like to be a part of, the second link down below will get you hooked up with a discount. I appreciate you guys' time. If I didn't get to your stock, feel free to message me via Discord. We'd love to answer any questions you might have. Don't forget to follow me on Instagram. If you guys don't, please don't fall for fake accounts. I will never message you first. There's a bunch of fake accounts of me on every platform. I'm normally verified on every platform, and I definitely will never message you first. The only service that I offer is LPP, and it's to watch me trade live. I offer no copy trading. I offer nothing crypto related. I'm not a big fan of crypto, if you haven't noticed. And I definitely don't do anything over WhatsApp or anything like that. Just please do not fall for that. So I hope that earned your thumbs up. Please consider subscribing. Hope and wish you guys an amazing and productive week. I hope that you are intentional with your trades, that you're calculated, and that you're not just thinking about how much money you can make, but that you also take into consideration how much risk you are exposing yourself to. Again, markets are in the green right now. We'll see if they continue. That's the big if. Like always, let's make sure that we end the year on a green note.